Oh, all right, all right, all right. Welcome, traders. Welcome, welcome, welcome to another edition of Market Update Time with yours truly, John Howe, of course. Now, what I want to do in today's session, guys, and I want to talk about is, are we about to see a reversal in the markets? In a lot of the markets, are we about to see a reversal in the stock market? Are we about to see a reversal in silver and gold? Are we about to see some sort of reversal in these markets here? So that's what I want to be covering in today's session. I'm going to be covering all of that. And, you know, is a reversal about to start? So I'm going to be sharing that with you in the. So that's what I want to be covering in. Oh, there we go. All righty. So let me make sure that this is just say, hey, when you're logging in, and where you're from and all that sort of stuff. And let me just pop this chat out. You guys can't, you guys can't see it on the other end. It must be really weird for you guys. So anyway, alrighty. So I'm so excited about this week, guys. So excited. I had such a phenomenal trading month last month. So much volatility, so much movement. And I'm just so excited from that. Yeah, I'm just really excited. Anyway, guys, so as I said before, in this session today, I'm going to be sharing with you, are we about to see a market reversal coming soon? So let's actually get straight into this here. Let me bring up the typical disclaimer here before I start. Alrighty, guys. So do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the markets, and it does take you a long time to become a really good trader. So be smart about the way you're trading and be smart about the way that you're doing things in the markets, okay? Alrighty, guys. So let's get straight into the markets here, and let me actually walk you through this here. Now, before I do start, guys, just so you know, if you go to mastertraderlab.com, you're gonna go to this page here, and on this page here, you can join the Master Trader Lab for free for 3 days. And what I'm going to be doing is just let you know that, firstly, the price, this special discount of $6.99 per month is actually, I'm removing that, and it's going back to $79 per month soon. And also on this page here, I've got a ton of bonuses I'm giving away as well too. They're also going away as well too. I've just been doing a massive special with the Master Trader Lab. And also on top of that, I'm doing a live training session. And this month in February, I'm going to be doing a live training session teaching you my #1 trading system. So if that's interest to you, if you'd like to get access to that, very soon, I'm taking down the special discount. I'm taking down the trial, and I'm also taking down the bonuses. So if you go to mastertraderlab.com, you'll be able to go to this page here, and you'll be able to start to sign up for free. Log into the Master Trader Lab. And if you don't like it, just let me know, and you'll never be billed. But if you are, then you can stay a member to getting live training and coaching sessions from me every single month for only $6.99 per month, which I think is an absolute screamer. Anyway, let's get straight into the markets right now. What's happening with the markets here? Firstly, what I want to share with you guys is looking at the big picture with the stock market here, okay? Looking at the big picture here with the stock market, what do we see here? Now, remember, we always need to go back to where are we in the phases of things. So let's go back to this weekly chart here for a minute. And one thing you want to see here on this weekly chart is where are we at right now in the mix of things. So firstly, we actually have a bit of a down movement through here, then a bit of a sideways movement through here, and then we have a down movement and then an up movement from here as well too. As you can see, right? So down movement and up movement from here. So when we're actually walking, when you see this here, we've had a pretty big, massive rally here. Now, one thing that you want to realize is that in a bear market, you tend to get pretty strong bearish movements in the markets. Bearish movement, but also very volatile swings on the upside as well too. On a bear market, it's pretty volatile. On a bull market, it's not as volatile. So one thing that you want to be looking at, and one thing you want to be seeing on the Dow Jones is, where are we at right now? So if I look at my weekly chart once again, and I bring up my trend lines, look where we are. Look where we are at right now. Now, the thing is that we are at a pretty strong area right now where the market is likely to cause some sort of reversal happening soon, because we're at this area where it's had so much support. And now we're at this area where we are right now. And now we're likely to start to see this market start to reverse here soon. So if I go back to my daily chart here on the stock market, look at this here. Now, firstly, what do we have here? Let's break this down one by one by one. Firstly, we have this top trend line here, don't we? This point through here, resistance, resistance, and then also resistance through here. So we have a lot of resistance through here, don't we? A lot of resistance through here. We also have this green box through here is a major resistance that I'm seeing from my higher time frame charts, And then also this other support line right here, this support line here, okay, just this support line here right now is actually that was that weekly support line coming up where we are right now. So when we're looking at this here, support, and now we're getting into this resistance level, that's where we're at right now in the markets. Okay, that's where we are at right now in the markets. And so if we actually look at this here, it looks like that. If we do, the first thing is like we're getting right at that conjunction point right now. And if you look at this, market, look how weak this market's been going up. Meaning, look at all the small little candles as they rise. It hasn't been a strong rise in the market. Even though we've been going up, it's been small bar, small bar, small bar, small bar, small bar. It hasn't been strong. It hasn't been pretty strong candles all the way up. Makes sense? So this is what you call a weak rally. Even though we've been going up, it's been a pretty weak rally. A strong rally is, and I tell you what, by looking at the psychology of the market, a strong rally, it's pretty much something like this point through here. Right, so if we have a look at this from here to there, see how we actually had pretty strong candles, apart from one or two, maybe just one. We had pretty strong candles and it ran up pretty quickly. But notice from here to here that the bars have been, it's been like it's up and then sideways for a week and then up for a couple of days and sideways for a week and then up a couple of days. It hasn't been strong. Okay. It hasn't been strong in the markets where we are right now. So we haven't actually seen a strong mark. We haven't actually seen, we're getting a this is a very weak rally. It's not a strong, we're not getting the bulls coming out really strongly. So that's actually a warning sign where we are right now. We're at this area of resistance right now, and we're getting a massive warning sign where this is getting at the area of resistance. So for me personally, if we start to get our close below that 24,500 level, that for me is now where the market is now likely to start to see. If we get that, then we're probably going to start to see a nice strong drop back down towards these lows, back down through here of say 21,000 or something like that. So that's what I'm looking at there right now on the Dow Jones. Same for the S&P 500. What are we looking at here? We're looking at the same thing as well too, right? But look at, if you take everything off the screen here, and if you look at this market here, look how weak this is, okay? Look at the psychology of the bars, Now, if I bring up my box here, look at this point through here, right? Even, let's do that point through there. All right. So look at that. Even look at that point through there, right? We had up move, sideways, and up move. That was okay. Look at this point through here. Notice how pretty much majority of the bars were pretty strong, solid green. But look at it from here to here, right? We went up for a couple of days, small bars, doji, and then sideways for a few days. And then we ran up, and then we came back down, and we ran sideways for a week, and now we're running back up again. This is what you call a weak rally. It hasn't actually been strong. We haven't actually got any strong. This is what we call reading the psychology of the overall market. You know, and yes, last week we talked about, like, there's a lot of things we can talk about. We can talk about, you know, how that, you know, that the market is still creating lower high. There still could be another lower high. So the sellers are in control. We talked about momentum last week as well too. If you haven't seen that, go back and watch that session about momentum. But right now, are we about to actually see a reversal in the markets? And we're getting to that inflection point right now, as we saw on the Dow Jones. From that inflection point, that's where we are seeing that we're getting, again, this is a pretty weak rally through here. And if I bring up this thing through here, and I bring up this through here, I want you to notice something. Notice how that ever since we actually got this market, ever since we got this market rally through here, we've had pretty low volume throughout this entire time. Now, it doesn't mean that it can't keep going up. It can. But this volume has been pretty low. If we start to get some strong selling and we get a big volume spike again, like we saw through here, then that could be the start of the next catalyst of the next downward movement. So that's what I'm looking at there right now. And same for the NASDAQ as well too. Same thing. Actually, the NASDAQ's even a lot weaker. You know, once again, if I bring up my good old Snagit tool here, look at this here. From here to here, look how weak that is, right? Like it hasn't been we haven't got a strong rally out of this, have we? What I mean by that is, look, we went up for a couple of, look at this, small candle, small candle, small candle, sideways for about a week, and then up, and then we went sideways for about a week or two, and then we went up again. It's like, look at that. Look at that. We're now getting a lot of weakness in the markets, aren't we? It's not a strong buying movement in the markets there. So that's what I'm looking at there right now. So are we about to see a reversal in the markets? That's what we're seeing there right now. I believe we're getting to an inflection point in the markets, but I personally would like to see a close. Once we get a close below 24,500, that tells me we should start to see a lot more downside in the markets there. And also even looking at the things like silver and gold as well too. If we look at those long-term charts, we've been rallying up. So are we about to see a reversal in the silver and gold here market? And also looking at this gold chart through here. All right, we're back above that trend line, aren't we? Yeah. So so this, are we about to see some sort of reversal on this, because we've been going up for quite some time? We've had a rally sideways and another rally here. So it'd be really interesting to see what's going to happen with silver and gold. That's a bit of a question mark there, but getting some pretty strong signs that we're likely to see another leg down soon coming out of this here. So that's what I'm looking at there, guys, with the overall stock market and with the overall silver and gold as well too. Are we about to see a reversal in the stock market, guys? That's where we're at right now. And so once again, that psychology that this what we call weak rally, along with the lower high, and this still could be another lower high in the Dow Jones, which the sellers are still in control overall. That we just had this pretty strong drop down and a strong rally up. I would say that that we have a good chance of actually seeing another drop down. Once again, guys, we need to see a close below the 24,500 level first on the Dow Jones. That would show me that the short-term momentum's changing or two. Then we bring into the bigger picture is sellers still in control. Once we see the short-term momentum drop, then that's what we're likely to see from there. So either way, guys, I'm so excited for this month. I really am. I'm so excited. There's so much going on right now in the markets. There's so much movement, and I'm just really excited. I had a phenomenal month last month. And I'm just looking to continue my streak here. So keeping my A quality setups to an absolute maximum, meaning only taking my A plus setups and not taking anything just that looks okay, but looking like I only take those really good setups. And yeah, we can just go from there. So I'm really excited. So with that being said, guys, let me answer some questions here. Once again, guys, if you go to mastertraderlab.com, the free trial, the special discount, and also those bonuses are going down. And also I'm going to be doing a live session soon teaching my #1 trading system. So if you want to get access to Master Trader Lab and also the bonuses and all that sort of stuff, then this may be, again, very soon I'm taking all that down. So go to mastertraderlab.com right now, get access to all that sort of stuff. Let me answer some questions now, guys. Alrighty, so Let's go through to here. Alrighty, so let me answer some questions here. Hey John, funny from sunny Texas here. Always enjoy your market updates. Thank you, Biggs Bexod. Bexod. I appreciate that, man. Thank you very much. That leg down was the first leg of many. I do believe that as well too. I do believe that only because where we are right now in the cycle of things, as well. So we in the next couple of years we're going to see another recession. It's pretty much banked in the books. So it's not a matter of it's not going to happen. It's definitely going to happen. The thing is that remember, guys, a stock market crash, 2008 stock market crash took a whole 12 months for that to happen. Okay, or probably a lot more. Actually, probably a year and a half. Start of 2008 through to the middle of 2009. So that was a year and a half. So things just don't go straight down, even in a crash or recession, so to speak. Things still take their time. Canada here, fantastic. Buy gold. Hey John, would you say that we are at an inflection point in the Dow? Yes, definitely. Sellers are still in control because we are still getting those lower highs in the markets. This here was the last lower high. So we still could be getting another lower high through here and then a drop back down. So I definitely want to be fighting that. I definitely wouldn't want to be going long right now. And yeah. Well, I didn't get into anything unless it meets my plan anyway. So because whatever I think is going to happen never happens. So if I think it's going to if I think it's going to drop, well, I'm going to go buy some call options because I'm always wrong. I just trade when my plan says to trade. Be careful. Cool. Who is buying the market? Is anyone buying here? DMC. Well, there's obviously plenty of people buying the market right now. No in all cash. So, John, this could be a bear trap. I wouldn't call it a bear trap. I just call it just the market moving. The market's gone through its cycles, meaning, but we have a drop down and then we have a rally back up. And as long as we keep making lower highs, then that's what the market does. Remember, guys, in any market, we have pullbacks. Pullbacks is a term, it's against the underlying direction of the trend. If the trend is up, we're going to get a pullback, which is the pullback down, and then we get a rally. If we have a downtrend, which we do right now, a pullback is against the trend, which is up. No win or cash. So, John, I would like to see a false breakout before going short. Okay. I'm not sure what you mean by a false breakout, but niche 586. My recommendation to you is to not go short until you actually have a proven setup that you just don't go short because you think it's a good trade. So many traders out there get their heads handed to them because of that one thing. They trade based on what they think, hope, or fear. Never trade based on what you think, hope, or fear. Or trading based on what you think, hope, or fear is never a good idea. And what I mean by that is that, like, I'm looking at the markets right now and doing my analysis. Yeah, that's good. But unless my trading setup appears on the chart, I can't get involved with the markets. I can't. For me, I lose money by doing that. The only way I make money is if I just stick to my trading setup. And if that means I have to wait 2 weeks for a whole setup, or I have to wait a whole month for one really good setup, then that's what I'm going to do. Would you like to see just waiting patiently for the Dow to turn? All about timing. Okay. It's moving up on headlines. Oh, elf. I wouldn't say that. I just call it. It's gone through its cycles, really. If the market starts to drop, then obviously remember the news has to create news. That's what they're paid for. So they have to create something. The reason why market's happening, right? Yeah. Alrighty, guys. So, alrighty. Um, don't know. Hi, John. Do you use any particular rule when drawing trend lines, e.g., PCing trend line? MPTF, good question. For me personally, when I'm drawing my trend lines, for me, it's all about the most touches, the most touches that the market gives you. The most touches that the market gives you is that's the most relevant to the markets there. Okay. So what I mean is that it's not about where I think the trend line would be. It's about where the market is most respecting. Because we're drawing trend lines to see where the market is actually respecting that level or that angle. That's all. So for example, you can see my top trend line here is where the market has actually respected it the most. And so sad. Thank you. Thank you for that. Don't have to say you're a great teacher. Thank you. No problem, man. I appreciate that. Big picture. Isn't this the unusual market double top from January 2019? Usually parabolic moves double tops. Well, I wouldn't really say there's any double top in the market right now. It's just there's definitely no double top right now. Italy entered recession. We are probably in recession as well. Yeah, I believe that. I believe we're starting to get into that recession phase. Remember, guys, it takes 6 months of economic data to say, oh yeah, well we were in a recession 6 months ago. And if you've been looking at the earnings lately, it hasn't actually been too good either. Does John use RSI as another piece of evidence the market is oversold? No, I do not. No, I do not. I use the chart and the chart only. I don't use indicators anymore. I do with moving averages and volume. But mainly, even with the futures and Forex markets, there is no volume. So I just use simply just really just one moving average. That's all I really need. The main thing is I'm looking for the chart. The chart setup is the most important. John, would you say you'd be able to look at the WTI crude? Would love your input. Okay, so if I just go to crude oil here, there's nothing to be worried about this thing here with crude oil. If you look at the crude oil, we've actually had a big drop down. So we're just getting a nice healthy correction out of this here. That's all it is, guys. If the market keeps going down for quite some time, you better believe we're going to go through a period of a bit of a pullback. That's how the markets work. Same as Apple right now. If I look at Apple right now, Apple's having a bit of a rise through here. Doesn't mean it's changed trend. Doesn't mean it's bottomed out. I believe this is just a nice, healthy pullback against the downline direction of the trend, which is down, and we're likely to roll over again, same as Apple. Do you need scanning software to identify stocks that meet a trading plan? Herbert, yes. Yeah, for the stock market, I run the scans across all the stocks to see what's happening that day. Yeah. But for my futures and Forex, no, I sit down and I do my job, which is dedicate a certain amount of hours to looking at the intraday charts. Thanks for response. No problem. January 2018, I mean. Oh, okay. Yeah. Oh, okay. I see what you mean here. It's not exactly a double top. This here was actually a false breakout, because if you're looking at this point through here on the Dow Jones, you said based on January 2018. So this actually wasn't a double top. It actually broke up, which broke up above it and then broke down, which is a false breakout, which is more of like an end of trend type of indicator when that happens. If it was strong, we'd actually probably continue through, but we didn't. We actually completely reversed ever since then. So that there was a false breakout, and then we actually dropped. The market does its move. News are excuses to explain the moves. That's right. Yeah, they have to create some news anyway. John, you know charting platforms offer volume. Most of them do, yeah. Or actually pretty much all of them do. But is that actually buy and sell volume, or is it tick volume? What is tick volume? Tick volume is based on, if you're watching a tick chart, all right? If you're watching a tick chart is like is a transaction chart, all right? A transaction chart. So back in probably about 10 years ago, I was heavily trading the E-mini S&P 500, heavily trading that, lots of volatility trading. And I was trading all the way down to a 49. I think it was a 49 or 55, one of those tick chart. So the tick chart would be a 49. That means after 40, if it's a 49 tick chart, after 49 transactions have gone through, the candle completes and a new candle starts, and so on and so forth. So one transaction could be one contract. The next transaction could be 10 contracts. The next transaction could be 100 contracts. But after 49 transactions, after 49 transactions have gone through, then the candle stops and then it starts there. So I used to trade that 1 minute charts and I think 5 minute charts as well too, very heavily. They're pretty good because you don't get the time on the market, but when you get through when you go through a very high volatile, high volume phase, you can have like 10 candles pasted into like it's like, we're talking like 10 seconds, like all these candles, especially when the FOMC announcement happens, like bam, all these candles just paint on the charts. Yeah, it's crazy. So that's what tick volume. That's what tick volume really is. It's a transaction volume there. Man, I'm getting a bit of a cold here right now. Thanks, John. Go all the updates and taking time to make these posting. No problem, man. So you can use tick volume on different time frames. Well, you don't really. You don't. Well, the thing is whatever volume is compared. Like if you're watching a 5 minute chart, well, the volume is for that chart. If you're watching a 10-minute chart, volume is for that, and so on and so forth for that candle there. So remember, volume is not the main thing you should be focusing on. It's not, the volume's not going to be the big thing for you. The chart is. It really does come back down to that, And I had someone recently say to me, it's like, John, the chart doesn't mean anything and blah, 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 all that sort of stuff. And I'm just like, man, the chart is everything. You can't trade a fundamental. I mean, if you're a trader, you're getting in and getting out. You can't trade that fundamental. Investing in a fundamental potentially, but even in fundamentals, everything fundamentally looks good right now and so on and so forth. Like, how can you not trade the chart? That's the only thing you can trade because you trade the price. You cannot trade the fundamental. So the only thing you can trade, yeah. Thanks, John, for the explanation. No problem. No problem. What do you mean by Forex? Foreign exchange markets. So I trade the foreign exchange markets as well too, Forex markets and stuff like that as well too, to really help me there. John, in your FX trades, do you use volume as well as other techniques? No, Sad, no. I'm not joking, guys. Like this, I know this might sound crazy, but I'll share with you a trade that I did just probably about a week or so ago now. And I'll share with you. This is all I use to trade the markets with. A longer term moving average, which is, people know what that is. It's a 52, nothing special about it. It's a 52. And then I use a 9 moving average for a short term moving average as well. That's all. That's all I use to trade. But the main thing, 90% of my trading comes from the chart pattern. The pattern on the chart is the most important thing. This is all I use to trade with, guys. And even when I'm trading the stock market, like so many people believe that you need all this crap on your chart to do well. You don't. You don't. The most important thing is understanding how to read the chart, the market, the bars, the candles, whatever you want to call them. That's the most important part. It's not the moving averages. It's not the volume. It's not It's not the indicators. It's not an RSI. It's not a MACD. It's not having 4 or 5 indicators. That just makes it more confusing for you. The most important thing is understanding having a really, really high probability, powerful chart pattern. And off that chart pattern, you have an entry bar. You know exactly when you're looking to get in. Simple as that. Keep it simple, people just have all this crap on the charts. No wonder they're complicated. No wonder they're confused all the time. What's all the only thing that really matters is the chart itself, the chart pattern. That's all I'm looking for. And that's my trading plan. Okay. That's my trading plan. My trading plan says I need to wait for an A+ chart pattern to set up. Once I get that, I'm all over that because I know literally most of the time, 90+% of the time, that's going to do really well. I'm going to say that again, guys. The chart pattern that I trade with an A+ setup, that there is no doubt about that, will generate a really nice profit 90+% of the time. Now, I might get a trade once a week. I might only have one trade a month. I might have no trades for an entire month. I don't know. But that's the way you trade. For people out there say, oh, that's crazy, and so on and so forth. It's like no, that's the numbers. But once you get an A+ setup, the hard thing is, see, my system works. Well, it's not my system. I learned it from my mentor, but the system works. The hard part about trading that is you doing your job, being consistent. If you want to trade the foreign exchange and the futures market, the intraday charts, you need to do your 3, 4, 5 hours every single day. Be consistent, be disciplined, and be patient and not take crap. That's the hard part that people find with, I haven't had a trade for a whole week. Oh my goodness. Or there might be something that looks okay, so they take it. Or I haven't had a trade for 2 weeks. I've even sitting in front of this market every single day for 5 hours every night. That's like what, 25 hours a week. I've just sat in front of the screen for 50 hours these last 2 weeks, and I haven't had one trade. Oh, I'm starting to lose faith in this thing. That's what most traders do, and then therefore they spiral backwards. They take a shit trade, they lose money. A really good setup comes, they don't take that, and that makes money. That's why your success in the markets, comes literally 95% of your success comes from that. Comes from your consistency, discipline, and your ability to be able to be patient. As I said before, I have a very high win-loss ratio, but I don't take a lot of trades. I think I only took about 4 trades last month. Now, that was a very, very good month, by the way. Some months I don't take any trades. I don't know what February is going to bring for me, but I know as soon as I get that A+ setup, I have confidence to put a good amount of money on those trades, because most of those trades do run on from nice profits. And not only just nice profits, but we're talking 3, 4, 5 times sometimes my risk. So if I'm risking $10,000, sometimes I can generate a $30,000 or $40,000 profit on that. If I'm risking $5,000 on that trade. Now, what I mean by I'm accepting the fact that I'm accepting the risk of that $5,000, because it could be a stop out and it could be a losing trade. So I'm accepting the risk. Okay. So I hope that makes sense. How many people say last month is bullish when? How people say last month is bullish when it's so parabolic? Does the rubber band theory apply? If so, well, the rubber band theory applied down here, which means the market got so extended on the downside because it dropped vertically so strong that we had a nice sharp rebound. So yeah, so that's what that is. That's the rubber band effect. So the market is having a rubber band effect right now as we speak. When trading stocks, how do you scan for such a setup? Any tips? Well, firstly, MPTF. Firstly, you need to know exactly what you're looking for in your setup, and then secondly, set up some scans to start the filter. Like I scan, over 1,000 stocks every single day with my scans, and it brings back maybe maybe a list of 10. Now those 10s are potentials, and then it's my job to go through those lists and see if there is anything through there. That's what you do. Yeah. So I give all my for people that are part of my coaching program, my private coaching program. I give them all my scans and all that sort of stuff as well too. People often force trades, John, and that's why they lose. They don't wait for the market to reveal his hand and understand exactly what you're saying. Well, it's not so much the market revealing its hand. It's people don't wait for the setup. That's it. That's it, guys. Have one simple, powerful setup and just take that you know is going to work out more times than not. You do well. But most people are just so impatient. So impatient. Which means what I mean by that is, once again, is like, if I haven't had a trade for a whole week, I'm like, okay, well, there'll be a trade next week. Next week comes, okay, there's no trade this week. Next week comes, okay. I just simply have, my job is to sit there, because I have lost so much money in the past by taking shit trades when they didn't meet my plan, that I link so much pain now to taking shit trades, because I only go backwards when I do that. So I've linked so much pain to doing that now, because I've done it so much times and losing so much money in the past by doing that shit, that I just don't do it anymore, because it's like I only go backwards when that happens. But every time I wait and be patient and take a quarter of the trades, which is only the really good setups, I end up going forwards. Huh? Who would have thunk it? Who would have thunk it? Better to trade off the weekly charts down to daily, less time spent on screens. Well, if you're going to do that, you're going to have less trades as well, right? It's the timing factor as well. So if you trade in the daily charts, put it this way, guys, I haven't had a daily chart trade in probably well over a couple of months now. So I haven't actually had a stock market trade well over a couple of months. Well over 2 months now, I haven't actually had a stock market trade when I trade options, because there just hasn't been any. I haven't had any trades. Now, I had some trades going on before with the SPY and stuff like that, but I'm out of those now. I had some other trades, but I'm out of those now. But yeah, that's all. You got to understand that. If you want more trades, you got to put more time in. That's all. On the FX pairs, John, I trade the 12-hour bar. Okay. Half-day chart. Okay. And on the US indices, I use 4-hour charts. Works for me. Cool. Cool. Well, if it works for you, then that's all. For me personally, I don't really have any, I don't limit myself to a time frame. I say, this is the setup I'm looking for. Let's see if it's on the 2-minute chart. Let's see if it's on the 5-minute chart. Let's see if it's on the 15-minute chart. That's all I do. Let's see where this setup's appearing really, really, really nicely. And once I do that, I start to apply my rules, and then I get into it. I don't limit myself to a time frame. I hope that makes sense. Alrighty, guys. So make sure you head on down to mastertraderlab.com, because I'm going to be doing that live session very soon about with my #1 trading system. Also, the free trial, the special discount, and also the bonuses are going away soon as well too. So go to mastertraderlab.com right now, guys. Get access to that, and I look forward to seeing you on the live training where I'm going to teach you that system as well too. So have a great day, guys, and I'll speak to you next time.